10:05, December 28th. This is the Tony Floyd Show. Today I'm going to talk about a couple. I'm going to review the movie Juno, and we have stockbroker Kevin here today. We're going to ask him a couple questions about the market and what it was like during the crash we had in '87. Alright, Juno. I went and saw this movie. It was like a corny chick flick. It really was a corny chick flick, but I enjoyed it. It was about a 16-year-old girl who gets pregnant, and then she wants to give up her baby for adoption. And you'll never guess the father that she wanted to give her baby up for adoption to. Justin Bateman. And I haven't seen him. I didn't forget what program he was in. It was in the 80s. I forget what program he was in. What was the name? You don't remember that program Justin Bateman was in the 80s? Family Time. And what the heck was he in? All right, Kevin.
Yes.
Morning. Speaking to the microphone.
Yes. Good morning, sir.
So you were in. What was the exact date again? If I remember correctly, it was December 17th or 19th, 1987.
October 19th, 1987. Was the first day of what they became to be called the stock market crash of '87. It really started on Friday the 16th. I was working at a firm at that time called L.F. Rothschild, and on Friday the 16th, the market started to come in the afternoon, coming in pretty hard. And people saw that as a buying opportunity because the market had been so good for so long, and they didn't see it ending the way it did, the rally. The high in the Dow Jones, the high in 1987 was at 2,722. On about the second day of the crash, which would be Tuesday, the intraday low, meaning it didn't close that low, but it traded as low as 1620.
Wow.
And the actual closing low for that 3-4 day period was 1738. I mean, today, in comparison, to show you what today the Dow Jones is at 13,360, and it's traded over 14,000 earlier in this year. But in that time, 2,722 was very high in the Dow Jones, and it had gyrated down to about the 1900s, so or the low 20s, and then when the crash started, it gyrated down pretty good. On that Friday, the market was down 100 points. I was talking to traders. I had some hedge funds and people I was talking to that were buying stocks that day. Some guys I know that were on the golf course, because we had like an Indian summer going on at that time, and they were calling me from the golf course, and when I was telling them where stocks were and what was going on, they figured it was because of a Friday afternoon. People didn't want to take positions home over a weekend, and they started to buy some stocks. So they came in long Monday, and the news over that weekend didn't read too good. There were some problems in European financial markets at that time.
So, what was going through your mind at the point when you guys all realized the market's crashed? I mean, everything's going down. I mean, there was a moment when you guys everyone just realized, whoa. Was there that drastic moment?
Yeah, probably very late on Monday when it got down in the 500. It was down 500 points. You know, on Friday when the market closed down 100, they had never closed down 100 before in recent memory, and people were really upset about that. After the looking back, and then Monday it went down 500 points. I think it closed down 508, probably down more than that during the day, and came back up a little bit at the close with short covering. People come in and cover shorts, and that forces the market up a little bit. But everybody was looking at each other, and for people that weren't trading or weren't actively trading like we were trading stocks at that time, but people, salesmen, things like that, they were looking at this like it was a movie. And the people in the public, you know, ordinary citizens that weren't involved in trading stocks every day were looking at it like a movie. They couldn't believe what was going on, and they just kind of looked at it. They weren't doing anything. None of them sold stocks. Very few, in comparison to the overall number of investors there were. Very few sold out on that day. They didn't buy though.
So really everyone was just in awe. Really.
Yes. Yeah, that's
like zombies.
awestruck. Sure, walking around. The firm I was with had a lot of old partners, and these guys were walking around. I mean, almost banging into walls. There was a toy back in the '50s called Mr. Machine. I mean, that's what some of these guys looked like. They were walking, and they in complete awe, and they were watching their net worth go down quite a bit. And the firm I was with, we didn't have any bad positions. My trading department, we were in the equity trading department. We didn't have large positions because we were asked the week before to keep it low because somebody saw something going wrong in the junk bond market, and there was a problem in the junk bond market, and they couldn't figure out what it was, and they had a hard time with the liquidity. Liquidity meaning it was a little tougher to buy and sell stuff. So at that time, they told us keep a low profile, don't have a lot of big positions. So we happened to be lucky coming in on that Monday because we weren't loaded up with things. And but we were champing at the bit to buy stuff, but we were told to lay low now until they figured this out because there were some other problems in the European financial markets and in the junk bond markets and things like that. And there were things going on there which came ahead of the market sell-off that day. And when everybody looked back, they figured out all this stuff was just a precursor to what was going to happen. So
it went from worse to worse.
Right, and Monday was bad enough when it was down 508. On the next day, Tuesday, it really got hairy because there was so much stock for sale. Some of the specialists on the floor couldn't open stocks. They had to just keep spinning their wheels and waiting until they could get some buyers to come in and help them buy. I mean, I spoke to a couple of specialists that day. One told me that during that day, Tuesday, his firm in the morning had the lowest capital position they've ever had in the history of the firm. And then in the afternoon after the market closed, they had the highest capital position they ever had because the stocks came back so much on Tuesday. They saved a couple of things saved the market on Tuesday, and one was that the stock exchange called a lot of corporations that list their stocks down there, and they talked them into enacting corporate repurchase programs, which means when a company, let's say Triple M or Disney, goes in and buys their own stock back for their capital stock.
Yeah.
And somebody at the stock exchange, whoever was in charge of that, plus other investment bankers, different firms, called these companies and said, we think you ought to start buying some of your stock in here. You'll help us, but also you'll be buying some cheap stock for yourself. And at that moment, when they started announcing all these buybacks, the market came to a screeching halt going down. It had been headed down, and it came to a screeching halt. And sitting there, you could feel it. If everybody we spent the whole morning throwing stuff out the window. All of a sudden it became dead quiet. And then these buy orders started coming in. And then everybody went hairy on the other side, coming in and buying like crazy. So they saved it on that Tuesday. And then Wednesday, and then a week later, you had to sell off to test. You have to always test the bottom, and they sold off again. But we haven't seen anything like that. What I will tell you is that today in the market, things are so good. It felt exactly like it did before that crash. There was a stocks were at prices you hadn't seen in a while. There was a lot of things that were virtually the same. I'm not predicting that we're going to have that problem now. I don't think we are. We have plenty of stuff, and I think that the market should probably sell off a bit, and it deserves it. It needs a little rest, but we have plenty of safeguards in place that we shouldn't have that. The big blame went to the insurance programs that they had set up at the time. When you had a portfolio of X amount of stocks, X amount of dollars, as the market came in, this program that they had ticked off selling calls and selling futures against your portfolio. And as the market came in so much, these things kept kicking in and selling. And that's what drove it down worse. Now we have circuit breakers put into the market that when they get down a certain point, you need they don't close. You need plus ticks to sell. In other words, they can't keep selling it down. They got to stop, and they need plus ticks to sell it. So that kind of stops it from going down in such a landslide. And there's other circuit breakers and other stopgaps involved there too.
So what you're saying is people were actually trying to help the market, but in actuality they were hurting it.
They were trying to help their portfolios and their customers, the mutual fund owners and people that own mutual funds in their portfolio.
Yeah.
By putting these circuit breakers in, they were preventing these guys from losing a lot of money in any one day, because when they started selling futures and options, they were selling them short, so you were making money on that side. So let's say you were long a million shares of Disney. As Disney went down, they were kicking off these options and futures short, and you were making money on that side. So what you were losing in your stocks, you were making up on the futures and options. But it got out of hand, and there was too many people doing it.
Oh.
So I'll just give you some figures. The S&P 500 at the end of '87 was at 244. Today, as we sit here, the S&P is at 1476. That's up like 6 times. The NASDAQ in '87 was at 325. Today, the NASDAQ is 2,677. That's about 8 times higher. So it's because the market's done so good since the crash, and there's many more people investing because of these baby boomers. Everybody takes all their spare cash and savings and puts it into mutual funds, which buy stocks, and they're driving the market higher because there's so many people planning for retirement. Where are they going to put it? You know, the real estate market is in the gutter right now, and so they need another place to invest to make some money for the future. So the stock market and the bond market look like the best places right now. On that, in October, I'll just give you a little thing here. In October in 1987, $15.8 billion went out of stocks and into money market funds. That's what was sold just in that 1 month. They sold $15.8 billion worth of stocks and put that money in money market funds, which are virtually much safer. You're not going to lose your money in a money market
Yeah,
fund.
it's like a CD.
Yeah, right. And I mean, some of the other thing, gold back then was at 485 to about 500, some in that range. 485, 500. That's what gold was. Today, gold is at 800. It's come up that far. Oil in 1987, oil was selling at $16 a barrel. Last couple of days, it's traded up at $96, $97 a barrel. That's what oil is today. So, but you know, prior to 1987, in 1981, oil was at $30 a barrel. So it shows you. I mean, it's a cyclical thing.
Yeah.
We're seeing oil today at $97. You know, a year from now, it might be at $60, or it might be at $100. We don't know. You know, depending on what goes on in the Middle
everything
East.
goes around.
And
Everything goes around.
all the, you know, oil's climbed. China has become a major consumer of every natural resource that we have in the world, and they're big buyers, and there's a lot of people. That on top of all the other Far Eastern countries, Japan and everything. So it's forcing oil higher, and they're using it, a bunch of it. The United States is the monster of oil as far as oil use goes.
Why are people getting the impression that I mean, I was even under that impression that the economy is doing bad, things are bad. I mean, you just
know, at our level,
everything's tripling. Everything's tripling.
Yeah. Well, the economy has come a long way since then. You know, and the economy, we're told, is doing pretty good. But not at our level. Like here in Florida, I mean, our housing is under pressure right now. The prices are bad. There's nothing selling. That's hurting a big part of the economy because there are a lot of people in all the different industries you figure that are involved in housing. They're all hurting. And the consumers are hurting because the guy doesn't have a lot of extra cash to spend. So that, you know, it's a ripple effect that goes throughout the Florida economy. But not everywhere is like that. New York, they're doing a little better. There's more, you know, it's a different kind of a environment, different jobs. People working in New York City on an average are probably making more money than the people that are making down here.
Oh yeah, that's triple too.
And some of these other states, they don't feel what's going on. But you know, the stock market
So
historically.
California, places like New York and California really aren't feeling anything.
Well, California, they have a real estate problem also. That's so they could be feeling more. They have a lot more higher money making industries out there. With Silicon Valley and everything, there's a lot of money being made. So and that helps the economy. But their real estate is in the hole too. All the places, both coasts are not doing well in real estate. New York, in the Hamptons, I happen to know because I talked to people. They're not getting the prices they were 2 years ago, but the stuff's trading. It's moving around. People are able to sell houses. Down here,
forget it. You're not selling anything.
I think Port St. Lucie, they probably got 20,000 houses for sale that are not moving. But
and that's going to make the price.
Yeah, well, the guys who want to sell have to sell it down, and some people just sitting on it and waiting and waiting and waiting. But I think that best guess is, towards the end of 2008, we're going to start to get a little better down here. People's confidence will come back as long as we keep the insurance rates, the tax rates, and we have no hurricanes. Things will get better. One hurricane throws everything into the wind.
Because on O'Reilly, they had mentioned that the prediction was for next year the real estate was going to go back up. Then someone else had said that was going to be that's a fallacy, because they said
we don't know
real estate is not going to go up.
Well, we don't know when it's going to go up. Nobody knows when it's going to go up. It could start going up tomorrow if there's a reason for it. We don't know, but there's a lot of inventory to get through, so things are not going to get rosy right away. We got a lot of inventory. I read someplace in the paper where the Real Estate Board for Florida came out and said, right now on the multiple listing services for Florida, all the houses that are for sale, there's 11 years worth of inventory. So in times when we weren't in such depressed times like we are now, it would take 11 years to eat through the inventory that's on there for sale now.
Huh.
So that's very hard. But
Yeah,
a lot of
luck.
that stuff will come
Good
off.
luck.
A lot of that stuff will come off as the credit crunch and everything gets better. A lot of that inventory will be canceled. People will say, people are trying to sell now because they want to scale down. They want to move to a cheaper place and have more spending cash. Things get better, their jobs get better, the economy gets better, they start making money, they'll stay where they are, so a lot of that will come off. That's why it's hard to predict when.
Yeah, I was still always under the impression, to go back to the crash, I was always under the impression that things were so bad still because of that. And you just put it like Dow, you said tripled. And oil you said more than tripled. Didn't you say it was at 12 at first?
$16
Then it went to
96,
right?
Now, yeah. So that's that's up 5-6 times
Yeah, that's
what it
5
was.
times, yeah.
So but that's what's happening. But inflation has gone up a little bit. We don't talk about inflation in this country. We're told there is no inflation, but things don't go from those prices without some kind of inflation. So
Yeah, obviously things do. I mean,
But
we always thought the 80s were so great, we tripled them. I was always under that impression as well. Wow.
Well, for years after the crash, there was a lot of uncertainty, and people were still very nervous after '87 because they saw what could happen. I mean, I remember myself working in the industry, and for years after that, when October came, we were all on the edge of our seats. And I did not take a lot of positions, because you kept thinking it could happen again. One of the reasons that it happened in October, not everybody knows this. I mean, people in the field know, but mutual funds year-end in October. Mutual funds have to straighten out their books, and they report what they have in their portfolios, and everything goes in on October.
Yeah.
So by the October 31st, they got to have whatever they want to close the year out with. So they use that month of October to sell stuff they don't want. Let's say they have a stock that had some bad news during the year and it's down low, and it's not doing well, and nobody likes it. So they don't want to show that in their book, so they're selling that. And on the reverse side, they may have a stock that they've made a lot of money in, and they want to sell that to take some profit. They want to take some of that off the table. They want to take a profit. They want to sell it all to get that money and show a big gain. So they have to sell it during that month too. I mean, they could sell it in previous months, but when you get down to October, now they're looking and saying, what do we want to get rid of and what do we want to keep? And so that fed that problem that we had in October of '87. That was starting to feed it. I mean, to move that kind of money, $15.8 billion back then, that's a lot of stock. You know, and the
It's a lot of anything, really.
mutual funds were selling at traders. I mean, halfway through the day on Monday, a lot of traders on Wall Street took a stand and said, you know what, they're not going any lower than this, and they bought them when the market was down 300. Well, the market closed down 500. You know, you had bosses going around on desk telling guys, sell. I don't care what you think, it's not working. Sell it. You know, I don't want to go home along all this stuff. I don't care what you think. Now, the guy would have been proven right 2 days later, but these people, they're looking at the bottom line. You know, you have firms that have a lot of different departments, and they're looking at the bottom. They said, we're not going to be at risk. Nobody wants to be at risk for that much money in an uncertain time, because uncertainty is the biggest enemy you have in Wall Street. You know, they can deal with things like, unfortunately, this poor woman that got killed in Pakistan yesterday, the market opened down because of that. But by today, they figured out, by yesterday, everybody figured out what the risk is and what it's going to risk. They still have a president in Pakistan, and you know, it's not as widespread a problem. It's not going to affect the economy in the U.S. is what they're saying. So today the market's up.
They said it will affect their everything was going positive in the war. Then they said when that happened, now everything is kind of going bad.
Right, which will come back to you know, hurt us and hurt the economy, because there's more money we got to spend over there. But
well, it seemed the history tells. It seems that when people are scared, they're not leaving the house. You know, which makes sense. And it makes sense, and it makes you laugh when people are saying, yeah, go out and buy that new car, otherwise the terrorists win. You know, so according, I mean, I put a down payment on a Caddy yesterday because the terrorists are not winning with me.
Lots of luck.
Yeah, lots of luck with me. You know, terrorists ain't winning with me. But yeah, so what you're saying is that we'll actually make the market go up today?
Well, the market opened higher this morning. I saw it.
Really?
And yeah, because now they're back to. Yesterday they were nervous. Uncertainty was what I was talking about. The market was uncertain. Yesterday was, you know, you don't. But then the same thing after 9/11 and everything. After a few days, things calmed down and people could see exactly what happened. But in the middle of these big upsets in the market and the world economy and everything, in the middle of those things, when they're going on, people sell stocks, they don't buy stock. Or they don't buy. They may not sell, but they certainly don't buy. Because and that's why these markets rally so much after these problems are passed, because now everybody wants to get back in. The traders want, you know, traders have to trade.
Yeah, but wouldn't I mean, if history tells us anything too, no one wants to pull a Kennedy. I mean, when all these stocks are going down, you would think no one wants to pull a Kennedy and start buying all the cheap stocks, and then when it goes up, you're a rich man.
Yeah, well, a lot of people did that. A lot of people did that. As I said, it didn't affect the guys in the street as much as it affected us working in the industry down on Wall Street. It had more of an effect on us because that's how we make our living, and we're pulling the trigger a lot faster. You know, the guy that's working a 9-to-5 job, or the farmer that's out in the field in Iowa, he only knows what's going on when he comes in at 4 or 5 o'clock in the afternoon and sees what went on. Mm-hmm. So he has to make a decision then. So by the time he gets in, a lot of that stuff is past. Or what the biggest mindset is that I'm in this for the long term. Okay. I'm 50 years old, and I don't need this until I'm 65 years old. So I don't have to react to every little bump in the road. And that's what you see going on right now. A lot of people are not getting out of stocks and throwing stuff out the window because they say this is they think the market is on the long term is going to do a lot better. Probably is. I showed you. That's why I brought up those things about 1987 compared to today.
Yeah.
There's a lot more money in the market. I mean, the volume on the stock exchange in those days was anywhere from 130 million to 175 million a day, and a big day would be 200 million shares on the New York Stock Exchange. Mm-hmm. So you'd have anywhere from 130 million to 200 million. Those are good days. Today, yesterday, the volume on the market was 988 million. I mean, it's hard to fathom, but that's what traded yesterday. 988 million shares, and yesterday was a slow day. We're in the holiday season now. You're between Christmas and New Year's. You're not going to get a big volume. I mean, you know, they trade billion shares a day, over a billion shares a day on the New York. Jeez. Now it's become a one big market. I mean, the New York Stock Exchange. It's all traded electronically. There's very few specialists left on the floor. You don't necessarily have to go to the New York Stock Exchange to execute an order in your stocks because everybody's out there trading it. You just go on the internet go
So
to
the floor isn't as chaotic as it used to be.
No, you could have a bowling alley down there now. I mean, look at it on TV. Look on CNBC and see what goes on down there. You could throw a hand grenade and not hit anybody. You know, it's
That was the whole Wall Street thing. That was the whole
that
point
was
of being
it,
a broker.
Yeah. Well, there wasn't a point of it, but yeah, it was a big thing down there, and that was the center of the world. You know, as far
So
as
an exciting job is someone boring now. Sitting at a desk.
Yeah, because they have so many. Today it's all programs, black boxes, and you know, your biggest asset going to Wall Street today is if you came out of MIT with a mathematics masters.
Mm-hmm.
It's all math. You know, years ago it was all Harvard, Stanford, and those were the guys that got the jobs on Wall Street. Northwestern had a big business school. Northwestern University in Chicago, big business school. You know, University of Pennsylvania, Wharton School. Guys out of Wharton got good jobs on Wall Street. But today, it's all MIT is the biggest thing. The guy who can set up a trading program and the math quants. All these people that can figure using math can beat or match the market. That's what they want to do.
Mm-hmm.
And that's the key today. If you ever watch that show on TV, it's on Friday nights. It's called Numbers, about how they're solving crimes using math. You know.
Oh,
And,
no, I never even watched that show.
Yeah. The guy works with the FBI. His brother's an FBI agent, and they're solving crimes using mathematical equations, and they can do that. They can match the market with it. You don't even have to buy a stock anymore. You can buy these programs, and they get you in the market, and you can do exactly what the S&P 500 does. So, because there's so much money involved that they have to have these vehicles to satisfy all the people that want to get in the market.
Yeah, okay. 1031 WPBR. We have Kevin, the stockbroker. The studio line is 641-8882. I gave the wrong phone number.
No, that's the business line.
Yeah,
Your
and
number was
forget that 533-6134.
6134.
I realized that it was coming out of my mouth. All right, the line you're supposed to call. Forget that other one. It's 533-6134, just like it is every week. 1032 WPBR. I'm thinking. I guess I'm totally just you're taking me for a loop here, because I always thought we never recovered from that thing in '87, and I mean I'm still on that. I'm baffled that everything's tripled, because it never. I always thought the '80s was the greatest decade we were ever gonna have. Everyone always talks about, oh, the '80s. Everyone was rich in the '80s, and now nobody's rich now, but it's gone up.
Yeah. This rally started in 1982, was when the rally started coming out of the doldrums. The 70s was very quiet. There had been a pretty good rally in 66, 67, 68, 69. The market was in good shape and it was rallying. And in the 70s we had a recession and it came down pretty hard. 72 was a bad year. So in 82, the market started to change character, and it started to be active, and it started to trade up, and there was a lot of movement going on, and the size was getting larger. Size of the money invested in the market and the trading, everything was larger.
And people.
Yeah, and there was a lot more money involved.
Mm-hmm.
And that was the beginning. And so some people will tell you that 87 was only a correction, because things can't go straight up forever. They got to go up, they got to come back in, settle down, and get a new foundation a little higher than the other one. You know,
Mm-hmm.
82 it started down here, and at 87 it had traded up, and so they had to correct that a little bit. They brought it back down, but they didn't bring it back down to the levels where it was in the 70s. And then from there, I'd say it took a few years, but you know, 92 was pretty good again. It got good in 92, and we traded up. 91 was a little bad. Firms like Drexel Burnham and E.F. Hutton and everybody were going out of business for whatever reasons. You know, there was some finagling going on in the
Mm-hmm.
financial markets back at that time with junk bonds and things. But after that, so that caused a problem in 89, 90, 91. But that was and that could have been just a carryover from the crash of 87. But they solidified, they got a good base in them, and then they took off. And Not to, you see what we have today. The last couple of years have been outstanding. I mean, it's really tricked a lot of people. And I would say, you know, after 2001 and during 2001, things really slowed down, and we were preoccupied with terrorism and stuff, and there was people worried about the economy, what was going to happen, and
So it's somewhat of a stressful job, is what you're telling me.
yes. Well, you know, and stressful,
People
but
weren't jumping out
exciting.
of windows for no reason. There was a reason.
Right, yeah, we had some of that in 1987. But every day is a new day, and every day is a different day, so it's that's what makes it exciting and why people keep coming back.
Well, yeah, it's like a high, I guess. Being broke on Monday, rich on Tuesday,
Well, it's I don't
middle
say-
class, middle class on Wednesday.
I'd like a little more steady than that. But,
But isn't like commodities? Isn't that a lot quicker?
yeah, commodities are a whole different game. Yeah, they seem quicker. Yeah, but they have big leverage. I mean, you don't have to put up as much cash to trade in commodities. You only put up a portion. Their margin requirements are much different than they are for stocks.
Stocks, you need all the money.
Well, no, you can margin 50%. You can margin 150% during the day, but at the close of business, 4 o'clock, you can only take 50%. In other words, if you have 100,000 in tradable cash, you can take $200,000 worth home. During the day, you can trade it up to 500,000. But so there's a lot more availability, a lot more cash. They eased the margin requirements after 1987 also to get more people involved because it slowed down so much. They wanted the public back in because the public got scared and they left. And they sat on the sidelines, and whatever they had, And they watched until it got better. So, but today there's so much money involved. I mean, it's a joke. I mean, what goes on every day, it's hard to fathom. I mean, it's so much different than when I was down there. And I think, you know, the things like in a different vein, the same thing can happen in the real estate market down here. You're at a low. The guy who's out there now who has the cash, because it's hard to borrow money. If you're not, you've got to be really sitting pretty to be able to borrow money. They've changed these laws on this mortgage
after
stuff.
the boom
after
thing,
this, what that just went on. So
I had spoken about it once. They gave me a mortgage with no job.
see,
I don't know how. Who in their right mind would do that?
Well, and they're paying for it now, and that industry is going to be revamped, and they're going to have to make more stringent rules.
Well, sure. It was like a homeless guy going to a loan shark, and I borrow $188,000. You got it, pal.
Yeah.
I mean, who does that in their
Your
right
body's
mind?
your collateral. But that's going to, when all that gets straightened out, and it takes a while, they'll be back, and there'll be new rules, and they'll try to be more responsible with the margin, with the mortgage rates, you know, with the mortgage applicants and stuff. They were putting through people that they shouldn't put through, and now we're paying for it. When that gets straightened out, so the guy now who's sitting on cash and is buying, and you see it, you know, I do some real estate, so I see it. I'm not very active myself, but there are people that have investors that are buying smaller houses. You know, they're not going after the big ones, but they're buying some of the smaller houses, and they think they're okay. There's money in the bank. You know, you don't buy it. You don't buy
They think it's an investment.
you don't
they
buy a
can
double
lose.
wide on the ocean or anything like that. But you know, something that's relatively safe, because you still got to insure these places, and the insurance rates are only starting to come down now because of Charlie Crist. He went to work for everybody in the state and helped.
He wanted to build that lawsuit. He's building a lawsuit against the insurance companies.
Yeah, but he went to them and well, you know what happened? He went to them and asked for some help, and they came up with some ideas, and they lowered the rates, and they more just as important as lowering the rate, they were able to offer insurance to people that they weren't even offering insurance to, and he went to work and fought for that. But then the insurance kind of backed out on some of the deals that they made with him. That's what he's annoyed about now, and that's what the lawsuit is. He's going back to them and saying, you said you were going to do this, and you're not doing it now. But insurance rates are coming down. I mean, as long as we get no hurricanes these last couple of years, my rates have come down. You know, I had like one bad year of rates, and now they're starting to come down on their own. And there's a lot of different things you can do. There's an inspection. There are people, my son-in-law does these inspections. Wind mitigation, they go in your house and look and see what kind of construction you got and everything, and they send it into your insurance company, and the insurance company can then give you a lower rate, if your house it meets the high standards of what we have today as building codes and things, and things like roof straps and stuff like that. The insurance company doesn't know exactly what you have, so they have a blanket rate. And when you can prove to them that the house is in better shape, they give you a better rate. So there's a lot of things coming to be, and that's why I think, by the end of 2008, things are going to be a lot better in Florida and a lot better in the real estate market.
Oh, you think so then?
Oh, yeah.
You agree with that?
Yeah.
Oh, okay.
But by the end of 2000, it's going to take a while. We have to eat through all that credit problems and bad mortgages and things, and it takes a while to get straightened out. At least President Bush is taking a shot and doing something about it, or getting people to work on it. He may not be doing it personally, but he got Paulson and some of these other guys in the cabinet to go to work. So they're working on some things.
Yeah, because Pastor O'Reilly and his guest on the show that day said that isn't so. They said that the real estate was not going to go up and back
Like
and
I
forth.
said before, that's just a feeling I have and what I could see, and it takes a while, but nobody knows. It can go up tomorrow and fool us all, and or it cannot go up in a year.
That's true.
So we don't know what's gonna. There's a lot of different things that can happen. Look at the real estate in Jupiter started going sky high when Scripps was going in there. Meanwhile, how many people can Scripps employ that have to buy? Can Scripps employ that are going to need to buy houses? Everybody kept looking at that and thinking that was going to be it. They were going to be the savior. Well, it helped, but it's not the answer. It helped, but there wasn't enough. They're not going to employ enough people to make it. But it got the economy. It got the housing economy. It got the real estate going pretty good in Jupiter when Scripps went in there. Now they're talking about the same thing up in St. Lucie with another outfit. But St. Lucie. China could buy St. Lucie. They wouldn't be able to buy all the houses that are for sale up there.
Yeah, because Florida used to be known for a cheap place. That's why everyone started coming down here.
They came down to retire, and it was
cheap.
People retire because it was cheap, but it's not getting like that anymore.
No, it's just more. It's getting up there with New York and.
Well, everything is, sure. There's a lot
way
more
up
to
there.
do.
I mean, I remember you used to be able to buy a house down here for $60,000.
Well,
Now you're looking at like 200.
You still can buy a house for $60,000 in
Oh,
Florida,
St. Lucie,
but not
right?
over here. No, I don't even know about that. But
Up in the
there are
States.
houses you can buy, if you want to live in there.
If you want to live on farmland and stuff, that's fine.
But people still retire, and they're still going to come down here because it's pleasant, and they can, people get old. They can't fight the cold and go slipping and sliding on ice and all that stuff. So they're still going to come down here. There's some other states that are popping up now that people are. You see Tennessee. You see advertisements for Tennessee on TV all the time.
Mm-hmm.
You see advertisements for the Carolinas. They call Carolinas the halfback state because all the New Yorkers that move to Florida, they go halfway back and they move to North Carolina and South Carolina because the weather's still better than New York and the cost is cheap. But they're going to price those Carolinas up there too. But I see the biggest ads now for Tennessee, Georgia.
Where nobody lives.
Well, that's what I'm saying. But
There's a reason
cheap
for that.
now, right? It's cheap now, but I mean, just remember when you wake up, if you buy something, you wake up tomorrow, you're in Tennessee. So it's not like being in Florida.
It's not. If you go to bed where there's chickens, you're gonna wake up where there's chickens.
Yeah.
That's how that's gonna
But
go.
I like Florida because Florida's like a suburb of New York.
That's what it is. Suburb of New York, Pennsylvania, and Jersey. And Connecticut. Don't forget Connecticut.
It's the sixth
borough.
The sixth borough. Yeah,
That's
what
what it
they
is.
call it. So
It's
that,
the
I mean,
sixth
it's
borough.
easy. It's not that it wasn't that much of a culture shock for me to come down here and live. But Tennessee would be a little different. You want to eat raccoon and possum for dinner, we'll go to Tennessee.
And Ohio and everything, I can't get over that. A lot of your generation now is moving to like Kansas and Ohio. Like those.
Ohio's too cold. I mean, Ohio's colder than New York probably.
Well,
you want to be.
I'm just thinking states I would never even imagine. I wouldn't even go there.
New Hampshire's big. Do you know that New Hampshire and Florida are the only two states in the union that don't have a state tax? At the end of the year, when you do your income taxes, you pay the federal government. You don't pay. New York, you had to pay three. We paid New York, state, city, and federal. New Hampshire, you pay federal. Florida, you pay federal. That's it. You go one tax return. That's it. So that's now. If I go to New Hampshire, I mean it's too cold up there for that. You know, I'm not getting the benefits, are not like here. At least down here, I think down here in Florida is a great place to raise kids because they're outdoors all year round. You know, up in New York when the weather gets nasty, the kids are stuck in the house. What are they going to do? You know, you got to take them everywhere.
Well, it's better being. I mean, they're stuck in the house, yeah, but they can't be out doing drugs. And I mean, down here they're getting pregnant at 16. I mean, because they're out of the house.
Well, I'm talking kids now. I'm not talking. You know, those. I'm just saying for young kids that.
The young kids are worse than anything.
Well, you get them involved in sports and stuff like that. They play soccer down here all year round.
If they choose to. I'm just really, excuse me, I'm just realizing how blind I am. I got my glasses off. Oh, man. I can't see anything. Nothing. What about that whole insider trader thing in 87?
Well, that was well after 87, the insider trading.
Oh, was it really?
Yeah.
I always thought it was the same year. What year was that? 90?
Well, let's see. Oh, you know what? It was before.
Oh, yes,
the insider trading with Boesky, Ivan Boesky, and that was before 87. That was about 85, 86. And, yeah, because they had already started, but it didn't culminate and it didn't finish up as the court cases and everything till after 87, but the stuff started before.
Okay.
And it all started with one guy that was trading in stocks that he shouldn't have been trading in on inside information, and he got caught, and he flipped and turned in Boesky and everybody else that got caught in that thing. Now that didn't affect me. That was at a much higher level. That was investment bankers, and these guys were working on deals to get stocks taken over and forcing stocks. You know, they were forcing stocks to get taken over.
Oh,
they would go out and start a rumor that
laddering, I think
XYZ was in play. You know, they'd say XYZ is in play. Now maybe it wasn't in play, but you would get all this stuff. You would create buzz in the stock, and they'd go out and start buying the stock and get it. And then the company may think they're in play, and then the company may turn around and call up another guy and say, "Look, we're in play. Somebody's after us. Why don't you get involved? We'll merge. We'll do this to prevent them." They didn't even know, but it was like a fireman going out and starting fires, so he has something to do. You know. And that's what they were doing. They were creating. That was part of what they were doing. There was a lot of other things involved. They were forcing things. So when they got nailed, and that hurt the market a great deal, you know.
Mm-hmm.
It was just another thing. The company I worked for at the time, L.F. Rothschild, strictly legitimate. They weren't doing anything wrong. But in 1987, they had a very large investment. Partners in the firm would kick back some of the money. Let's say at the end of the year you got $500,000 bonus. You might take $100,000 out of $200,000 of that and put it back in the firm. Put it back into the capital of the firm, because it was only, you know, you'd get stock. You know, you'd get stock, and they take that money and they do things with it. And one of the things that this L.F. Rothschild did was start a risk-arb fund, and they would trade in risk-arb stocks. Risk-arb is the trading of stocks that are involved in deals. Because what they do is, let's say ABC wants to take over XYZ,
okay.
They would buy XYZ and sell ABC. Because when they got the new stock, it'd be one company. So they would sell them one and buy another. And that was what the arb meant. Was selling one and buying another of the same, because sooner or later it was going to be the same stock. They become this when the company took them over.
Yeah,
so they would sell a guy
name.
they would sell the stock of the one who was taking over, the bigger company, the one that was doing the taking over. They'd sell that short and they'd buy the little one. And then they'd end up with everything. Or vice versa, depending on how the numbers worked out. They might do it the other way. But there was a lot of money being made in that. And they could gauge their risk. So what happened, on the day that after those 3 days of the crash were over in October, that firm lost $46 million.
$46 million.
$46 million in a matter of 4 or 5 days in that risk arb, because when the things got so bad, they had to start lightening up. They had to sell. They couldn't sit there and do nothing, because they were watching the capital in that account, which was part of the capital of the firm, go down, down, down. So $46 million just about wiped them up. They forced them to sell themselves at a low price to another company. There was another, there was a Franklin Resources, a Franklin Franklin Financial that came in and bought them at a cheap price.
Now, I had mentioned laddering before you make I confused what you were talking about earlier. What is laddering?
No, I don't use the term. I'm familiar with the term. The only thing I can think about laddering is buying into a stock as it goes up. You know, if you start, let's say you start buying the stock at $3 and it goes to 5, you buy some more. It goes to 6, you buy some more, and you're buying it on the way up.
Because I'm trying to remember. I heard that. I had read that somewhere. Some term laddering, and I thought I was under the impression that laddering was when you're pushing the stock, when you're making all your customers buy Tokyo toys, you know what I mean? It's something stupid, and you actually raise the market by doing
I guess they could use the term for that. I've never, having never done that, I'm not so familiar with the term.
Well, that's a good thing, actually, then, I guess. So, you're still trading stocks now, or no?
Yeah, I trade. I have a trading account, and I trade, and I'm involved in a lot of the active ones. Every day
You
is
don't feel kind of just fed up, burnt out by
I look
it?
at volume. What drives me is charts. I have a chart service I subscribe to. I follow charts, and I follow volume. If there's a lot of volume in a stock, there was a stock yesterday that was up a lot. It was a $6 stock. It was China Back Battery, BAK. It's CBAK, and I'm involved in that. I'm long the stock right now. I just kind of woke this stock up. And yesterday, and what they do is they make batteries for cell phones in China.
I'm shocked. I'm shocked that they make electronics in China. I really am.
It's going to be a big. There's going to be a lot of phones there, so it's going to be a big deal. And
Everything in this room is probably from China or Japan anyway.
Most of the money I made last year in my IRA is in China stocks. And I find a great vehicle to buy these things is ETFs, which are exchange traded funds.
That was me. Don't worry about it.
Exchange traded funds. And I bought China Fund. And I have a couple of them. China Dragon, APB, which is Asian Pacific, so that's the whole basin over there.
Okay, it's WPBR. It's 10:53, right? Yeah, it's 10:53. We're talking with Kevin, the stockbroker, letting us know about stocks. What's going on with stocks? What do you recommend? You have any recommendations that someone should buy something?
In a position, I can't make recommendations because I'm not a licensed. You have to have.
You have to.
You have to be licensed to recommend stocks to people. I mean, all I can tell you is what I do, and things I've done. But yeah, you have to be a licensed guy.
Really?
All my license is expired. A license stays good for 2 years after working for a member firm. But when I came down to Florida in '97, I came to Florida in '97. 2 years after that, my license is expired because I was just trading my own account. You don't need a license or any kind of degrees or anything to trade stocks. You open up an account, you trade. But
when
you deal with the public,
need...
yeah, as soon as you deal with somebody else, if I deal with somebody else's money, if I take somebody else's money to trade, or if I talk to somebody else about buying stocks, I'm not allowed to do that. I'm not licensed.
Well, you can't even have a conversation like in a bar or something?
Oh, yeah, sure you can.
But
You
because
can
we're on a radio
you tell
show.
them what you do, but you can't go out and solicit to the public and say, I think you should buy that or buy this or whatever.
Oh.
But I just tell them about what I do and the vehicles that I've been using, which that's why I mentioned those ETFs. 'Cause there's a million of them, and they trade well, and they're good vehicles that you can invest in any country in the world. Every one of them has some kind of a fund there. And what's good about it is you're not in one stock. You're not in one particular Chinese stock.
Mm-hmm.
You're in a basket of Chinese stocks. So, and if China does well, see, that's what I looked at for my IRA a couple of years ago. I said, where's the biggest growth going to be in this country in the next 10 years? Because I'm going to have a 10-year window.
Yeah.
China, the Far East, China specifically, and I think in biotechnology. So I bought a biotechnology ETF, and I bought a bunch of China funds. and it's been good to me so far. You know, there's going to be something that happens when they knock China down. Who knows? We can't know what it's going to be. But at some point, they're going to beat these Chinese stocks up because there's going to be something that happens in the marketplace to make people get on them.
Yeah, yeah.
And for some reason, it could be anything. You know, currency translations, things like that.
Mm-hmm.
Right now, the dollar's at the weakest it's ever been. Right, in a long time.
Yeah.
So
yeah.
that's what hurts us. You know, that's why you see a lot of Canadians down here now, because for the first time, their money is worth more than ours. And now you're going to see a bunch of Canadians buying stuff down here.
Oh, really?
Oh, yeah. Foreigners.
Really?
So.
Oh, that could be why we're having an immigration. Everyone coming in here, this country now.
Oh yeah, South America. That's my Miami. These South Americans, their currency is worth more than it's been against the dollar, so they can come here and buy a lot more than they used to. So Miami's full of South Americans with money, Europeans. They go to the big cities, you know.
Oh,
they
yeah,
never heard
yeah.
a guy in Europe doesn't hear of Stuart, Florida, or Hokie. Whether he knows Miami, that's where he ends up. Miami, Fort Lauderdale.
That's true. That's true. Yeah, they always go to Manhattan. I heard they're all over Manhattan.
No,
everybody.
of course. Well,
everybody is in Manhattan now.
Manhattan's the capital of the world, whether anybody wants to admit it or not.
Yeah, it's like the League of Nations now, you know.
Well, that's always been.
Okay, it's 533-6134. We have 4 minutes left. We're here with Kevin the stockbroker, who is not giving us advice, not giving us any kind of advice on stocks at all. He's telling us a story. Nothing illegal going on. Not while I'm here anyway. 533-6134. I can see now. I can't wear my glasses. Okay, coming up next week, we're gonna have an interesting show next week. I'm gonna have to change what I was gonna do because I had forgotten there was a camera in here. I have to be careful who I upset now because it's a video camera. They know what I look like. It's easier to find me. So next week's show was something I had mentioned in passing. A certain establishment I was going to stop by and visit because I was curious to find out what all-female staff means. I was very curious to find out what all-female staff means. And I had promised my listeners that I was going to go in and see what one of these establishments is all about, and I will have the results for you next week. Even though I probably shouldn't, because there's a camera standing right at. I mean, it's worse when they know exactly what you look like right from the beginning. It makes it easier for them to kill you, and that could be a bad thing. Other than that, in the news, Pelosi is trying to get passed a law that these stores now cannot hire. They cannot hire anybody who does not speak English. They can get sued. They can get sued now. So I guess stores like Walmart better watch out. She's trying to get that passed, but oddly enough, the Republicans are behind it. The Democrats are not. Oddly enough. Democrats, even though, wait, did I say that right? Republicans are behind it, Democrats not, and the Democrats have more seats. So then it's going to become. I'm actually behind the law, and I would, if I had to consider myself, I don't think I consider myself Democrat. Everyone knows how much I love to vote, though. I would consider myself Democrat, but I got to tell you something. I got to go with the Republicans on this one. Because I've been in stores such as Walmart a million times, and I've had to ask someone where shampoo is. And they have no clue what I just asked them. They look at me and they'll smile and shrug you right off. And I'll think to myself, they were high school kids that are having trouble getting jobs that can speak English, and they're losing jobs to someone who can't even help me. What are they doing there? How are they working there? If you're not speaking, that's like me going to China and getting a job at McDonald's in China. How am I going to work there? How am I going to work there if I don't know what the people there are saying to me and asking me? How am I going to take orders? I really have no idea how I'm going to take orders. How am I going to do this? I really hope the law gets passed. I wish Pelosi luck in that. And I don't understand why the sides have been divided the way they've been divided. I mean, Pelosi is Democrat, and she's bringing up something her own people aren't behind her. I just that to me is the oddest thing I've ever heard in politics, right there. We finally get that the household Democrats what they thought was the problem. Now a Democrat wants to propose an idea, and the Democrats aren't behind her. It's the Republicans that are behind her. I'm not understanding. I mean, wasn't that the whole point? Wasn't that the whole enjoyment of what was going on? Democrats have the seats now. They have the power of the seats now. And now all of a sudden, now nothing's happening? Oh, their own people not behind them. Oh, man. Don't even get me started. All right, it's 15 seconds to 11, WPBR. This is Tony Floyd. Thanks for listening. I'll see you next week.
Top 1340, the talk station of Palm Beach County.
The views and opinions expressed on this program are those of the host, guests, and callers, and do not necessarily represent those of WPBR, its staff, management, or advertisers.